Well then, it's time.
Picture this. You're either making your coffee, just got home from work, you're going through your mail, and boom! Oh, crap. That thing says IRS on it. We all get that feeling. Our stomach drops, our mind's racing. What did we do wrong? Am I getting sued? Are they taking all my money? Are they coming after me? Some people think, am I going to jail? What's going on? Right? That's the feeling that a lot of us get, even though we're probably not in trouble. Some of those are autos. Some of those things happen. And at the end of the day, understanding where you're at is what's important. So we got Morgan on to help us through that situation and get over those feelings and to really explain how we deal with that. But let's first dive into what's really going on within those, right? I know there's a lot of different ones that pop out, but generically and statistically, they're going to be all within the same somewhat category. So Morgan, without further ado, what really is going on when we receive these out of the blue type notices from IRS?
Well, unless you are filing your tax return with a known balance due, most of the notices we're seeing have to do with the IRS matching the data that you put on your tax return and comparing it to what's reported by third parties, such as payment platforms, apps such as Venmo, PayPal, your merchant processing accounts like Stripe or Deposit, Square. What happens is the IRS gets reports from all of these companies, all of these other outside sources, and match the data reported on your tax return. And unfortunately, it can take 2 to 3 years for that process to work through the system. So the notices we're going to be getting in 26 are for tax years 2023 and 2024.
Which is kind of crazy. And I know everyone's thinking like, well, why the hell, if they have the information, why am I doing anything? I get it. Trust me. I think our tax system could be changed, simplified, but hey, this is kind of where we stand at with it. Have you ever seen, or from that perspective, let's calm everyone down a little bit of like, what does it mean when I see those, right? Am I in trouble? Did I really do anything wrong? Am I going to go to jail? Am I getting fined? Because everyone gets scared when they see those things. They are official,
Absolutely.
right?
Yeah.
But a lot of them are computer generated. They're kind of just like the auto one, right?
Mm-hmm.
Talk us through what people and how they emotionally should attach themselves to this letter when it comes through.
Boy, first things first, take a deep breath, right? We all have that getting reported to the principal's office when we're kids in elementary school feeling when we see the IRS or the State Department of Taxation for your state in the return address on an envelope. So first things first, just know whatever it is, there is always a solution. And that is like one of my prime missions in life is to make sure that everybody, whenever they see IRS, they automatically think, hey, whatever it is, we'll figure out what the problem is and how to get to a solution for it. But a lot of times it's just stopping, taking a deep breath and reading what the notice says, because that is your power. 9 times out of 10, it's a computer generated notice. I'd say even more. I'd say probably 95% of the first notices that you're going to receive are computer generated notices of, we were matching the data that we have to the tax return you filed, and we think there may be an error. They always give you the opportunity to respond. So that's the first thing you need to do is just slow down and say, what do they believe you missed on your tax return compared to the data that they have?
Yeah, it's like checking your, it's checking your math work. Really, that's really what they're doing, specifically in the first one. And personal story, we had ours pop up from 2022, right? Our accountant at that time had some of my income as 1099 when actually it was W-2, and it took, I think, last year when we finally got the notice, and I think it's still being somewhat processed as we go back and forth. Like, we're talking about months and months of things to deal with. And that's really what I want to say. There's no emergency. I've never seen one. Now, you could probably quote me if I'm wrong, but there's never been like a letter that's so emergent that you need to like flip your life upside down because IRS needed something or asked a question or gave you the ability to appeal or reply. I don't. There's nothing emergent, right?
No, no, they always give at least 30 days to respond from the date of the letter. And they will post date the letters going out according to when they believe you will receive it. So a lot of times I pick up mail like today, let's say it's February 24th. I will pick up mail today that is post dated to February 26th, just because that's the way the IRS's mail system works.
Yeah, which is slow. I mean,
I-
everything's slow with the IRS. Let's be real, people. It is slow. Okay.
yeah, definitely.
So, who gets hit the hardest with these errors or in general with this situation? Because you had said that it takes a couple years for the system to figure it out. But
Mhm.
does that mean like the Venmos, the PayPals, and whatnot are filing them late? Is it meaning because, or is it just purely the system? Like who's getting hit with these?
Great question. A lot of times it is self-employed individuals or gig workers, like people driving for Uber or Lyft or the meal deliveries, self-employed individuals. And it's simply a matter of it takes the IRS system so long to catch up. These matching systems, it used to all be done by hand through examinations, but now they have computer programs. And a few years ago, the IRS got a bunch of money that was passed by Congress to go to them. And then Congress started having disagreements, and then the funding was pulled back. And a lot of that funding was to increase the technology capabilities. There's no reason why we can't electronically file a tax return, have any issues pop up within a few months, be given the opportunity to address it electronically, and then move on. But the IRS's processing centers, their technology is so outdated. You go to their offices and they're still looking at computer screens with the green dots on it or the orange dots on it. And that's how outdated their computer systems truly are. So we're moving into a digital age and they are so far behind us. You would think that it would be easy for them to upgrade just even this matching system, but the technology needed to do it in a more efficient manner is so great that they're just still so far behind. And that's why we're seeing notices for 2 and 3 years prior that are being issued now.
Oh,
So
the government. We have all this money. We would spend it
I know,
everywhere else. There's systems that are so futuristic, and then we still have some that are archaic.
so
I'll
archaic.
never understand the government. I just purely don't understand it.
Well, it has to do with funding. And, I always laugh about people who say defund the IRS. Well, that's the accounts receivable arm of our federal government.
Right.
That's not a realistic thing. It just isn't.
No, it is not. It is not. Um, what what costs or what things go into if we ignore? Say we ignore the notice and we're past
Mm.
those 30 days. What happens?
Yeah, then the IRS will go ahead and move forward with their understanding of the situation, and they'll issue you a notice of deficiency. They'll say, "Well, we gave you the opportunity to reply, but you didn't. So we're going to move forward and propose that this updated tax balance is now owed." That notice still gives you time to reply. So it's not an end all be all, but you definitely want to take action with either the first notice of a reported concern or you didn't reply. Now we're going to go ahead and move forward and say, we believe you now owe this tax based on the records that we have.
Kind of gets us into our next segment of the noise versus truth. So we want your initial reactions to the statements, if you will. Okay.
Okay.
First one, throw it away. The IRS is bluffing.
Only if you want to shoot yourself in the foot.
You
I'll be
alluded to this
honest.
one in the last segment. If you don't reply, the IRS can move forward without you.
Yes, that is true.
Just pay whatever they say so it goes away.
No, because their system does have errors in it. Let's say you do a lot of volunteer work for your kids' school and For a used uniform sale or a clothing sale at the school, you allow parents to pay you via your personal Venmo, and then you turn the money over to the school, right? It was just the easiest, fastest way to get this done. Well, all those Venmo transactions could be reported as income to you if you're not paying attention. So this is why I say, don't just accept what the IRS is throwing at you. Look at the records and see if you have a defendable position that you can take with them, and you have records to disprove what they're believing.
Absolutely. This automatically means I'm in an audit. As soon as I get a notice, oh, they're auditing me.
Nope, not at all. Not at all. A lot of these notices will also be a simple error like you put your child's social security number incorrectly on your tax return. That happens so frequently, you wouldn't imagine.
Or I see them a lot when people get married, name change.
Yes.
And those issues, and they're like, "What?" I was like, yeah,
Yes.
well, you got to do it all. You got to always be on top of that. All right, so that goes through that segment. As we get into the next one, which is your expert lens, where I want you to work through the framework of taking someone from when they do this, what they need to do, how they need to answer. I first want to hit upon kind of what we discussed off air a little bit, is what the One Big Beautiful Bill did and how it's beneficial in terms of these transactions, this reporting, and what it could have been or could have been worse when it comes to like these types of scenarios.
Yeah, great point to bring up. So prior to the One Big Beautiful Bill being passed, what was going to happen in 2025 was that any transaction amounts over $600, no matter what it was for, would have to be reported by these payment platforms to the federal government. So again, going back to that example of, for ease sake, you're just going to let people pay you directly for some type of school event via your Venmo. Can you imagine how much reporting that would have caused? Just an obscene amount. So what the One Big Beautiful Bill did do was it reverted the plan back to no reporting required unless it was greater than $20,000 or over 200 transactions. So it helped weed out a lot of that noise.
Which is good for like both sides, in my opinion, right? It's
Totally
good for the reporting company because that's a logistical nightmare.
Yeah.
But then also it has to get sent to the IRS, which then would have bogged them down and been a logistical nightmare.
Yeah, we need it to go easier for the IRS right now while their tech systems are so far behind. Let's not muddy the waters
right?
more.
We haven't, I know this is not about the IRS episode per se, but like they're also understaffed. Right?
Yeah, totally.
They've had layoffs and they don't have enough bodies. So you've got old archaic systems, understaffed, I'm sure an aging population in terms of their employees, which means training is down. Like you got a lot of things happening all at once. So again, another way to say, everyone take it easy, breathe a little bit. There are mistakes that are going to be made on both sides. Your fault, their fault. At the end of the day, we just want to get down to the answer, whatever that may be.
Absolutely.
So walk us through, give us your, whether it's, your 3-step framework, your steps or whatever, but like when I'm drinking my coffee and I decide to yell, "Oh shit," as loud as I can, and I see this IRS notice, talk us through the steps that we really should take when we receive that.
First and foremost, breathe, take a deep breath, calm your nerves, open it up and read it. The notices are they have dropped the level of communication in them to a 3rd grade reading level. And there will still be some information referred to in the communications that may be above your understanding just because you don't know the tax language, so to speak. But most people can read it and say, oh, okay. They're saying that they had reports of income that they aren't sure that I actually reported on my tax return. So that's the first thing. Reading the notices gives you a power over the situation and helps calm your. Number 2, if you can't understand why you're receiving the notice or what it means, contact your trusted tax professional. contact your CPA or your accountant, whomever did the tax return for you, and say, hey, I got a notice. I'm going to email it over to you. Can you take a look at it and give me a call back and let me know what your understanding the problem is. Number 3, right away, make a note of any deadlines provided in it and commit to taking action before the deadline expires. A lot of situations with the IRS and with your states can increase in aggression if you miss the deadlines provided. So those are my first 3 recommended actions that you can take to stay kind of calm and in control when you get a notice from the IRS or state.
And the top 3 mistakes that we have are missing the deadline,
Mm-hmm.
commingling and having very sloppy books, essentially, and then over confessing in writing what the situation may or may not be. Let's go through each one of those. So missing the deadline as a top mistake. You just alluded to it. Obviously, it's kind of the initial slap in the face. We gave you 30 days. That's a long time. Give us some type of response. So we don't need to speak too much on that one. But what about the sloppy categorization or commingling of your business and personal and just sloppy books in general? Why is that such a mistake that can turn into a big one?
The burden of proof really does lie with you when you're reporting your financial activities. And as a self-employed person, let's take that for example. If you don't keep copies of your bills, of your expenses, but you claim them on the tax return, and the IRS looks at it and says, okay, well, can you prove it to me? And you don't have those records, they say, okay, well, that's a disallowed expense, which increases the income that you are then taxed on. So organization and record keeping and being your own best advocate truly only benefits you in the long run. I know it's one of those things where it's the last thing you want to do at the end of a busy week, right? Is sit down and organize your bills and make sure that you're keeping copies of receipts and you're keeping your mileage log and all of this. Being self-employed is a lot, as you know, as I know. But having those systems in place truly only benefits you in the long run.
This is where I typically tell people, don't look at your finances every day, every week. Do it once a month, right? This is where you kind of get into that complexity. If you're a business owner, I actually say look at it once a week so you can help organize it, right? Yeah, your bookkeeper's going to be able to do so much, but they're not the ones living it. They're not the ones pulling the trigger and in that situation. So it's always good to reflect back on that week and say, okay, is everything in line? Did I notate things? Do I remember it? Okay, cool. Because you're eventually going to find something during the week that's kind of a red flag to you of like, I don't remember that. Like, I don't have any idea what that was. But since it's only been a week, it's very easy to go back and find it, plug in the pieces. Or you're going to find the mistake and go, nope, that was supposed to be on my personal card. Oops, my fault. Hey, bookkeeper, by the way, make that a personal distribution because me buying a sauna was not a business expense from my financial planning practice, right? Like, you also need to catch those.
Fun fact, I was talking to my bookkeeper because I use one, even though I'm in the financial world. Like, I want somebody who knows those P's and Q's, like that is their world. And I talked to her and I said, okay, so how many business owners have those hiccups with their credit cards in the business where they put personal stuff on it? She said, I don't care who it is. Every single one of my clients over the last 30 plus years have had at least a handful of those mistakes of using the wrong credit card or using the wrong debit card. Handfuls of times every year. She said every single business owner does it at some point in time or another. Now, the difference is whether you do it intentionally on a consistent basis or if it's just once in a while. You want to be the one where it's just once in a while. It just so happens you grab the wrong card out of your wallet. So just a simple tip for you all.
Yes. And also just let you know you're not alone. We all make mistakes. Right. Like, it happens. Okay.
I did it last month and I had to send her an email and say, I am so sorry. I had it in the front of my wallet and I used it once and I used it 2 more times before I even realized it because I just kept going for that one. So yeah, it happens to everybody.
Okay. The last mistake, over confessing in writing to your response. Now, this actually takes this is like a legal thing. So you're going to get a little legal tip from non-attorneys about that as well. But talk us through that one too.
Just stick to the facts. It's kind of one of those, if you've ever been in a deposition, answer the question asked of you and don't espouse any more on it, right? Don't go into any more detail. Yes, no, simple fact, and move on. And that's how you want to respond to the IRS.
And to anything legal you have to deal with.
Yes,
That's
exactly.
exactly the way it is. Keep it here, and then trust your experts, your attorney, your accountant, your financial planner. Give them the juicy details.
Yes.
So that way you can work it out. Doesn't mean you're guilty. Doesn't mean you did something illegal or fraudulent or whatever, but you don't want to get tripped up in something because you don't know what you're saying that could cause something else. So stick to the yes, no, and simple facts. All right. Client story time or story time in general. Walk us through a little story time. I should have like fire in the background or something for this time.
Yeah, right. I know. Cozy up.
Yeah.
Pardon me.
Cozy up onto the fire. Morgan's telling a story.
I know.
Little kids.
Bundle up, get cozy, settle in. It's a really simple one. And this is more common than you would imagine. So last year we had a client who hired us. He had about $80,000 owed in past due income taxes. He was a plumber. Now here's the thing. He did all of his own tax returns on TurboTax. And for those of us in the financial world, there is nothing that is more nails on a chalkboard than a business owner doing their own tax returns on TurboTax. And the reason I say that is not to make people feel bad if you're doing it, but you don't know what you don't know about how to file tax returns. And TurboTax only has a set parameter of questions that it will ask you. So there are a lot of times where if you are a business owner or you have a lot of investments or you have a lot of deductions you're claiming, those computer programs are only as good as the program itself. So just keep that in mind. But he did his tax returns using TurboTax, filing a Schedule C. And while we were focusing at the beginning of his case on getting him compliant with his estimated tax payment compliance, his requirements in the current year, and we were holding off the IRS with stays of collection threats, we received a notice from the IRS advising that Stripe, payment processor, had reported $146,000 in income for tax year 2022 that they didn't believe was reported on his tax return. So I get a copy of this notice as the power of attorney, and I call the client and I said, okay, so I got this notice. He said, yeah, I got it too. And I said, well, tell me about it. Like, let's talk about what you reported. And he said, well, I never got a 1099 from them, so I didn't think I needed to report it. And he said this in all innocence, right? And just, he's a plumber, he's a tradesman, and not to say anything about that, but financial records and everything was not his strong suit, which is why he ended up with a tax debt, was working with us. And then we got this notice of unreported income. So just remember, even if you don't receive a 1099 or you don't receive a W-2, you're still required to report that income for yourself on your annual tax return. So the IRS ended up increasing his tax owed for 2022. He had no challenges to it. We looked at what was reported. We looked at his wage and income records. And yeah, they were right. He just failed to include it in his income. So it increased his tax. And then there were additional penalties and interest for accuracy related penalty. But then we were able to lump it into our resolution plan. So in the end, there was a solution. It just took a little bit of time to work through that additional tax.
Oh man, that one, I always tell people, if you are getting money into your bank account, track it. Like just know that it is income. Don't matter about 1099 or W-2 or whatever. If there is money coming into your bank account, they're going to know. Okay? Simple as that.
We're in a digital age, right?
Yeah, especially digital.
We're in a very digital age. We're in a place and time where you have computers tracking everything. So just know that if you're not reporting it, odds are somebody else is.
Yeah. But it is March. And last month we had we ended with a Black History Month question to our collective that came in last month. This month, since it is March and we are in tax season, we have a tax question, okay?
Ooh,
Now,
okay.
everybody, this is the first time we're asking this. So you listen to the other episodes, don't cheat, don't go straight to the end. However, the question is, Morgan, there's this understanding around this time of the year that everyone fills out their taxes and they all try and want to get the biggest tax refund possible. Okay.
Okay.
Now, granted, there's some variables with business owners in that, and there's a different reason, but traditionally everyone wants a big tax refund and then they use that money and go do crazy things with it, buying new cars, tattoos, shopping spree, etc. My question to you is it a good thing to have a big refund? And is that something you agree to? Or is there a different route or a different number that you look for when you're explaining to people the tax situation and getting a refund or not getting one?
Ooh, that is a great question. It is. And I'll tell you, I try to hit that zero figure with my annual filing and with everybody that I work with. And the reason is money is more powerful when it's in your pocket versus if it's just sitting at the IRS. They are not going to pay you interest on the money that you overpaid to them unless there was a tax assessed and they charged you a higher tax, or you filed an amended return and you find out, or you're challenging an audit and you find out that you win and they owe you money back. They may owe you interest on that refund. You can always do more with $1,000 in your own investment control versus having it sit at the IRS. So
I agree.
My answer would be aim for net zero.
Aim for net zero. I love that. And no, you guys are not getting my answer on camera until the last episode of this series, which will technically be, I think, the first one in April. I want to do it right around tax season, but that's when you'll get my response. I'll tell Morgan offline, but yours, you're going to have to wait for me from that time period. But Morgan, I appreciate you coming on. Always happy to have you on. We're actually going to, and she doesn't know this, but we're going to have her on for our roundtable. We're going to bring her on in the summer roundtable because that's around tax planning season for everyone. That's kind of when we're in our lull. We're going to have her come on from a live Q&A. So everyone get your questions ready. But until then, tax season, get your taxes done. Don't forget any of the income. And if something pops up, breathe and call Morgan and her team.
Absolutely. Thanks so much for having me again.
The preceding program was sponsored by Black Mammoth. Any awards, rankings, or recognition by unaffiliated third parties or publications are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Black Mammoth. Information regarding specific awards, rankings, or recognitions is available on the Black Mammoth website, www.blackmammoth.com. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions and securities, or the rendering of personalized investment advice due to various factors including changing market conditions. The information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up-to-date, Black Mammoth do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature and is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Past performance is not indicative of future results.